Hey folks, Dan Frio here, the rate update. I wanted to post this video tonight to just give you guys a little bit of insight what's going on in the markets, a little more in-depth scope of things. So let's get to it. My name is Dan Frio. I do the rate update every day to make sure you guys are educated and informed when it comes to everything real estate, especially when it comes to the financing piece. So if you're new to the channel, please don't forget to subscribe down below. Leave some comments. Let me know how I'm doing, how you think I'm doing, or give me some ideas on topics that you would like to cover. But right now I want to talk about the demand for purchases. And the demand doesn't look like it's anywhere going to be coming down anytime soon. So let's go over to a report that I just got today, just to get you guys an idea what's going on with purchases. Is everything starting to dry up? And then there's an intriguing little thing here that I'm going to show you here at the end that I think you might be a little bit, it made me blink twice. And I'll explain that to you here in a second. But you're going to see the purchase market activity rises despite higher rates. We know rates are going up, and eventually, yes, it will affect how many people are out there buying. Do I anticipate prices going down? No. But I expect them to stabilize, and the main reason behind that is once we get more supply, then it'll eliminate the abundance of quotes or bids on a property. I talked to a young woman this morning, and she spoke and said that she had a buyer. Let me come back on the market. She had a buyer down in Texas over the weekend that she put an offer in on a home, and somebody bid $100,000 over the asking price. Absurd. Would I do that? No. Okay, so that's, so I'm not out there just pushing to buy real estate. You need to be prudent and know what you're doing. But let's break down some of the numbers and what's the purchase market still looking like. So you go through here, and basically in a nutshell, what they're saying is it hasn't inhibited demand yet for purchases. But guys, it will eventually. But you're going to see down through here, I'll zoom in on this section here, the purchase market still consists of a huge part of the mortgage business, okay? And you're going to see this right through here, the monthly change and everything else. I don't have to explain to you. You can read through the charts and see what's going through here. But you can see the purchase market, the current valuation is 173. The 1 month change, it's up 31%. 3 months change, it's up 69%. Okay, so that's big. But let's go down through here and see. Here's the intriguing part that's kind of, I say, odd. And I found this to be surprising. Normal loans are what we call conforming loans, and you're going to see those right here. They comprise of 60% of the market, all right, and they're down substantially from where it was. But then you're going to have this caption right through here. It's non-conforming. So what happens with the conventional loan? We get your application, we run your credit, and we run your loan through two systems. One of two systems. It's Fannie Mae and Freddie Mac. They do loans, they probably do, as you can see it here, 60% of the mortgage volume in the country. So it doesn't matter if you go to me, Wells Fargo, Bank of America, Citibank, whomever, we always use the same system because Fannie Mae and Freddie Mac are the ones that ultimately service your loan. I won't get into that. I just want to explain to you how it works. So if you go to me or you go to anybody else, we use the same system. So that's why I say a lot of times is if they got you approved, I'll get you approved, okay? Because I have those programs and more. So let's get on to the and more equation of this process. Those are called non-conforming, or what the new verbiage is right now is non-QM. You can see how they're spiking up the charts. Right now they consist of 18% of the market share. It is up 96%. So this is an area that if you're not doing these loans, you're missing out. You're missing out huge. If you're a realtor and your mortgage lender doesn't have the ability to do non-conforming such as non-QM, you're going to run into some issues because it is a substantial piece of the market and it's going to grow and grow and grow. Okay, so that's probably the biggest shocking piece for me. But then you go down through here and look at here's where we watch on a daily basis, and you get all this if you watch me. But let's just go through the dynamics on what's going on with interest rates right now. So you have the 10-year Treasury, which is currently at 2.32. Over the past 30 days, it is up 0.49, 0.5%, okay? 0.5% in 1 month. Here's the intriguing piece. Over 3 months, it's up 80 basis points, okay? So 0.80. So if you move it over to here, you would just extrapolate it from there. Look at this, the 30-year conforming rate. Now, I don't know where they're getting this number, because it's 5.25 today with costs. But they're saying the current rate right now on a 30-year fix is 4.79. Okay, it is up 69 basis points, so 0.69. So that means 30 days ago this was 4.1. All right, let's look at the 3-month delta. Delta means change. Okay, it is up 144 basis points, so that is 1.44%. All right, that's huge, and this is where a lot of people aren't getting it. So here's what I'm going to say about where mortgage rates are and what my expectations are where they're going to go from here. So the direction on where rates are going, I hate to say it this way, I don't know. Okay, but we've seen almost a spike of almost 200 basis points, or rates up about 2% in the last 90 days. That can't be sustained. It could be if the world ends, but I don't think the Fed's going to allow that or the government's going to allow that. So that being said, we have a program out there. It's called Lock and Shop, okay, where you can actually lock in right now while you're shopping for a loan. I'd highly suggest you check in on that. And we have an extended lock. We can lock your rate up to 1 year. So to find out more about those things, give us a call. The best way to do that, all the information is down below, but check us out at therateupdate.com or give us a call at 844-775-5626. Thanks a lot for taking the time to watch this. If you would, please give me a thumbs up, subscribe down below if you like the video, and leave some comments down there. I reply to every initial post, and I'd like to hear your comments. So take care, guys. I'll see you in the morning. Bye-bye.